What I'm here today to talk about is group captive insurance companies. And what I mean by a group captive insurance company is a company that's owned by its policyholders and provides insurance to those policyholders. Okay? Typically what we're talking about is casualty insurance, general liability, workers' comp, auto liability. If companies are paying upwards of $100,000 to $150,000 and more for those lines of coverage, they may be a candidate for a group captive insurance company. The advantages of a group captive are that the member or the owner realizes the benefits of his safety and loss control practices. When I say realizes the benefits, what I mean is that if the premium dollars that he pays in are not spent on claims, then they come back to the policy owner in terms of dividends. Okay? And also, the policyholder also gets the benefit of the investment income. The premiums are invested, they earn interest, they earn appreciation, and then when the policy year closes out and the dividends are distributed, part of those dividends include a return of investment income. Okay? Typically, in a traditional insurance product, those underwriting profits and that investment income inures to the benefit of the insurance company. So for those companies who have a good loss record, who have good policies and procedures in terms of loss prevention and claims management, and they pay a significant amount of premium for those three lines of coverage, they're an excellent candidate for this type of mechanism. Okay? The advantages are that in a captive, the premiums for each company are actuarially determined by that company's own loss experience. So rather than go into a pool, if you're a roofer, for example, and you go into a pool where your rates are determined based on the collective experience of all roofers, in a captive, you go in and your rates are determined based on your own experience. So if you have better experience than what is generally available or is generally out there amongst your peers, then a group captive would seem to make sense for you. Okay? The advantages of the captive are that typically the fixed costs, the expenses, are less in a captive than they are in the standard insurance market. Typically we're looking at expenses depending on the type of captive you're in and the type of business you're in. But one big captive that we do a lot of business with, their expenses are right around 30%, sometimes a little bit lower. Okay? So that means 70% of your premium is available to pay losses, or if you don't have losses, is available to come back to you in the form of dividends. And that's a better deal than you can get anywhere in the standard market. So we're looking for companies that are that they can be in many different lines of business. We have captive members that are in retail furniture, in orange juice processing. We have them in warehousing and transportation. We have them in healthcare. And so it really doesn't matter the type of industry. We can usually find a group captive that will fit the needs of that particular policyholder.